Alright, ladies and gentlemen, thanks for joining me. It is a Tuesday afternoon. This is an individual trade analysis update from Pivot Point Trading. What I'm going to do for you is go through probably just one individual trade list in this particular video. I will do another part 2 and part 3, and we'll just address these 15 or so ticker symbols, and we'll just talk about any sort of trades which are presenting themselves, both bullish and bearish, based on the contemporary market behavior. So if you want to look and learn about what the market is doing at the moment, or at least the forecast leading into and throughout the month of April for 2014, have a look at the previous video, and you get some idea of how we're looking and interpreting the market analysis and how we're setting ourselves up for success leading into April 2014. So what I'll do for you now anyway is just go through some individual stocks, and we'll begin with BRK, which is Berkshire Hathaway Class B shares, and then we'll make our way down the list and we'll finish with TGT, which is Target. So what we've had with Berkshire Hathaway is a very good, a very strong bullish trend breakout. So what's happened is that we've consolidated sideways. For the better part of a year, we've broken out above our trigger at 119.63, and we initially liquidated our position somewhere about the 124 area. What we said at the time was that we were so far away from all of the exponential moving averages. What we wanted to see was to see them catch back up and to see price, or how price interacted with either the 10 or the 20 exponential moving average. What we've done since then is establish two little tops, so you can see potentially a little bit of a double top, even though it's not really, it's more so a consolidation before we get the next leg higher in the bullish trend. It's a really simple trade setup. Any movement above 126.06, I'll be looking to enter into call option contracts on Berkshire Hathaway, or in particular you can also buy ownership into the company itself by owning shares. So that's a really good bullish trade setup in Berkshire Hathaway. No bearish trade setup. The reason why is because we're obviously in the initial stages of a new bullish trend, and you really don't want to be trading against the tide of the trend or the direction of the trend itself. It's a pretty dangerous thing to do. So what I'd also like to do, we'll just move into CHK. Now, Chesapeake Energy is quite interesting. It's giving us a few whipsaws higher and lower. It's in a bit of a messy sort of trading range, and it's not something that I'm too particularly excited about. If we have a look at sort of like the individual detail, what's happening at the moment is that we're coming up into an open gap. Now, this open gap is bearish, and it's going to act as resistance until we break above it, or at least close the gap. So the bullish entry is up here about $27.58. The bearish entry, I'm going to move down below support and below this rising trend line, about $23.52. A long way from price at the moment, but it's definitely something that you don't want to be involved in at the moment. You need better signals before you can get into CHK. CNX, again, above 41.54 bullish, below $38 bearish. This can go really either two directions. It doesn't matter which direction it goes. All I'm waiting for is the price to confirm. About midway through last week, it looked as if we were set to break out, but then on Friday we established that very bearish engulfing Morobozu candlestick, and that's telling us that price is getting rejected around this resistance level, about $41 a share. So if anything, we could be setting up a bit of a double top. That's fine if it is, it's fine if it isn't, but the neckline is really coming in at about $38.50. So $38 bearish entry is a very wise entry to be looking into bearish positions on CNX. Let's move into CSIQ. CSIQ is very similar to that of Starbucks at the moment, in the sort of fact that it might be setting up what we call a bear flag. And what happens is that we just get a little bit of a bullish retracement into the exponentials on decreasing volume before we get that next wave of selling pressure, which is going to take us down to our next support level. So what we can do is just simply bring this down, and I'm going to bring it down to about $30. Let me just delete that. I don't know what happened then. I'll just duplicate this then. There we go. Bring it down to about $30.67. That will really confirm the bearish breakdown. And the target on this particular trade is going to be all the way down at $27.10. So you can see it doesn't look like much, but it's close to $2.40 on a $30 share. That's almost 10%. You translate that through to an option, it's much higher. So a very good bearish trade on CSIQ. DE was a trade which triggered on Monday, and you can see the 2-day price action we've seen. We've seen the breakout above our bullish entry at $89.48, and we're up here at our first target about $91.39. We reset the trade up again at $92.03, and now we're just simply waiting for price to tell us what it wants to do next. Very simple trade. We had this set up just like this both a bearish entry and a bullish entry, much like many of our shares, and we just wait for price to confirm. Let's move on to FSLR. FSLR is very similar to that of Berkshire Hathaway, where you get that really strong breakout above resistance, and then you simply wait for price to retest that rising 10 and the 20. I think it's a little too premature to be getting overly bullish on FSLR at the moment. So what I'll do for you is simply bring a trigger up. I'm going to leave it about $75.30 a share. Once we get there, alright, then I'll be looking at positions entering into bullish contracts on FSLR. Am I willing to set up bearish trades on FSLR? No, I'm not. We aren't breaking support. We've got support levels below. We've got the rising 10 and the 20. There's just too much support below price at the moment, which can hold it up and give us some really annoying whipsaws. So let's move on. Garmin, I do not want to touch on. There's not too much to talk about, other than the fact that we're getting a lot of early reversal candlestick signals. So this is really a trade which is off the table bullishly. If I can have a look, really if I was to set up a bearish trade, it'll be below the swing low over here, and it's going to be below the 50 once it catches up in a couple of days to price. So it's really at 51.67. Do not expect it to be hit in the coming weeks. LLY, very similar, same sort of structure to many shares. You can see that really nice tight oscillation, very clear sort of structural pattern. Just waiting for a close above 60.52, and the good thing now is that I can move this up to about $56 as well on the bearish side. So very neutral trade on LLY. Looks to be getting very close to breaking out anyway. Let's move into LinkedIn. LinkedIn, very similar as well. 176.87. We have caught the bearish swings in the past down to support levels, and that's exactly what we'll do if in fact the market rolls over. We can trade right down to support again at about $165 a share. I'm not touching this bullish until it's above $208, and that's above the declining 50, the 10 and the 20, and above, this old support level, which is now going to act as resistance at about $201 a share. So let me just undo that and move it back to where it needs to go. Fantastic. Let's move into Oracle. Oracle, again, another share which is broken out. Very similar structure. You can see that again. All right, this stuff isn't rocket science. It's very simple, if in fact you get your head around the actual analysis. So you can see we've been consolidating into that 50, into that 10, into that 20. We really define that upper range, about $40 a share. So we set it above $40, about $40.12. We gave it a little bit of fluff or bluff, whatever you want to call it. In 2 days now, it's trading up about $41.50 a share. So a nice $1.40 move in 2 days, which is not too bad on a $40 share. It's about 2.5%. So if you're in the Oracle trade, just set your stop below support at about $39.50 a share. Just hold on to it. This could be a really nice trend, all right? We do have a dividend announcement coming out, so you could see a little bit of a bearish gap. But if this is, a long-lasting bullish trend, you will see buyers come in and start buying the price of Oracle back up. Pepsi, very close to triggering bullish. I was very excited about this $80.81 bearish entry a couple of weeks ago. Didn't trigger. All right, it didn't trigger. We didn't lose any money on it, but it just didn't happen. It didn't occur, which is fine. We understood that we put our entry in the right location. What's happened now is we've bounced into resistance, and we're starting to get what we call an evening style reversal candlestick pattern. So you can see we gap up. It's actually a 3-day pattern. It's right here. You gap up, and then you gap down in the opposite direction. The middle candlestick is what you call the evening star. It's supposed to be a star in the sky, and these two are just simply what complete the pattern. It is a bearish signal. It is occurring at the right location, but again, $80.81 is the trigger that I'm looking for. Solar City, trading down into support. It looks as if we've broken this bullish trend line. Let me just zoom out and show you it. I'll change to a weekly. You can see here we've got 3 touches on the weekly. 1, 2, 3. It looks as if we've broke down below it, and we could be establishing what we call a fan line. So we'll see what happens. We'll keep an eye on this on the daily, but I'm really not excited about this until we start breaking down below 56.53. Do not have it in me to trade against the direction of the downward move. And again, you've got this Fibonacci retracement box in here, which is going to act as resistance and a really good shorting opportunity if in fact we bounce up into it. Keep an eye, it's between $76 and $69. If I change to the exponentials, you can see that all 3 of the exponentials are coming in right around that $70 mark. So there's going to be some added resistance levels, and then look at all of this overhead resistance. You've got literally 2 months of congestion right in this zone. There's not enough risk reward to be entering into this trade bullish. The entry or the re-entry in this is to see early reversal candlesticks up here and then jump in when it turns over and establishes that lower high. So I'll put an LH and then a lower low relative to this low over here. Then we'll be setting up what we call a terminal trend reversal. Moving on, we've got SEE. You can see this little bidirectional trade setup. We had one at 30.81, one at 32.58. Profitable on the bullish side, which is fine, and didn't get triggered into the bearish side, which is fine also. So you can see our next target on this is up here at about $34 a share. Let's move on to Soda. Soda's just hanging out about our $44 entry. Really not a lot to talk about. We are trading right here at, I think it's $43.90, so it's 10 cents down at the moment. That's okay. 2 spinning tops. Interesting to see which direction that breaks. Target, again, you can see us consolidating right around the 10, the 20, and the 50. Looks to be getting a little bit of separation with the 3 exponential moving averages, but we do have that declining 100 and 200 above. So I've got this 61.70 entry just trading up here to about $63 a share, right? And that's where I'll be exiting target if in fact we do trigger. On the bearish side, I can give you one of those triggers as well. It needs to go down here about $57.70 below these swing lows, below the support level, and we'll probably close this gap right here, trade into about $56 a share. So that's the first watch list. Thanks for watching this video. I do appreciate it. If it was helpful, give it a thumbs up or at least comment and let me know if there's anything else in particular I can address during these market updates and individual share analysis. Thanks a lot, guys. I'll see you during the week. Goodbye.